evening, all. Ira Epstein of Linn & Associates with your metal market wrap-up for this Tuesday, and we are now at the 14th of September, 2021, and just after 5:05 p.m. Central Time. So the event of the day. What was the CPI number coming in month over month? What was it, 0.3%? The market was looking for a better number than that. I think 0.4. So that was down. And then core CPI missed also. So as the market looked at that, initially the stock market took off to the upside. But as the day wore on, because this market seems to be in a corrective mode right now, it just kept working lower and lower and finally came down. The coup de grace happened in NASDAQ at the very end when Apple's new release updates and the show that they put on came to an end. And just take a look at what the market did. As that ended, the market started rolling over there. We're looking at bonds and notes. At one point today, they were down in the 10-year note to around 126, and the gold market got up beautifully here to the, around the 1812 area. But let's go to the charts and see what we're doing. When I still look at a weekly area chart of gold, I'm still seeing the market having a downside bias. Why? On a weekly chart or a daily chart, bias to me is determined by where the market's at in relation to the 18-day average. Well, this is the weekly, so it'd be the 18-week average on this chart. If it's under it, the bias is down. If it's over it, the bias is up. Couldn't be simpler than that. When you take a look at today's action, let's see what the high of the day was. Today it was 1810.60, so it wasn't 1812. Got up. I knew it was in that area because I was looking at it. What else do we see in the chart? You had a big outside day up, which means in this particular case, you made the lowest low of this whole corrective break since the market was up here, and then turned around and closed higher on the day, and you're a little bit setting back right here. Why do you think that is? Take a look at these key moving averages. They'll be up in a second. That's what I want you to look at. You've got the lower and low, higher high, but the key average is the 18-day average, and again above it are the averages the market had a heck of a time with just back here. If you take a look right at the end of August, the market got up to the 200-day, the 100, and fought up until just recently at the beginning of September, then lost its way. So if it comes back there again, why wouldn't that resistance be the same? I would think it would. Number two, I don't see a big report to make a jump at this point in time. Unknown report. I mean, it could always be a world event, but I'm not seeing that. So far what I'm seeing on the chart is a higher high. You can see today's high took that one out. A lower low. That's not a trend. You pulled back to the 18-day average, the neutral spot on the chart, and you keep narrowing in the Bollinger Bands, and you're getting into that area that I call the psychiatry trade. It's when you don't follow through to the upside or the downside on either way in the market, and you narrow in those bands. At the same time, momentum has just flattened out. A very difficult market to take a look at and try to posture yourself for. The gold-silver ratio, notice how prices are climbing. That means silver's losing to gold again. And if you take a look at silver, the pattern is now one of a higher high, lower low, even without today's action. And I'm going to remove today. This was yesterday. That's what you pretty much had. You had gotten up to the Bollinger Band. If you fell much more, I was telling traders that I was talking to today, I wouldn't look for much under 23.15, and it didn't give you that. Instead, it decided to be one of these markets just pulled back for the safety of that 18-day average, that neutral zone on the chart, without a trend, sitting. It, too, is going pretty much sideways in the Bollinger Bands. No trend. The copper market hit its upside targets on Monday and Tuesday. Actually, on Friday and Monday. I take that back. Yesterday, the correction began, and that 18-day average should offer very solid support in the market. Are we trending, though? Not yet. You have a lower low, higher high. What you've done is you've worked off an overbought condition. You can see, I'll bring you right here, how you were getting overbought right into those numbers. Then you started with the stochastic dropping back. There's really not much here. The resistance at the 100-day average is proving formidable, especially when it gets backed up by that upper band that often stops the market called the Bollinger Band. In the platinum market, all I keep hearing is the supply chain issues on automobiles, and it's still bad. And what we saw today in the CPI, you had areas that fell. The areas that fell in terms of inflation were used cars, airplane tickets. Guess what went up? New car prices, because you can't get new cars. And that's why platinum and palladium are under pressure. You don't need the catalytic converters when you can't produce as many cars. And that's what keeps pressuring these two markets in large part. And you've got to look at that. Rent's the other factor going up that's weighing on inflation. But this was a day where the Fed's transitionary camp won the day. When you look at palladium, same thing. But how many days do we have under the Bollinger Band? Well, you were under the band yesterday. The day before you closed under the band, the day before, and on this day, you also closed under it. What about here? No. So you got 1, 2, 3, 4 days of closes under it. I'm looking for tomorrow, even if it closes under by day 6, be to the right-hand side. In other words, I think the market's going to shift gears. But here's what's important. The market, you can't count today's action, Wednesday, but both numbers were under 80. Both numbers under 80 on Monday, not so on Friday. So you can embed if you stay down tomorrow to keep that. My guess is what the market's going to try to do, it's just a guess, you know. I think it's going to move to the right-hand side of that and possibly still embed. In the dollar index, another failure. And where's the market failing? Look what it did back here. I just want to give you learn from these things. Here the market goes way up, gets itself going. The correction comes in, I'm looking for the 18-day average, that neutral zone. And the market starts fighting. Eventually, markets get their way and they move one way or the other. Now, I'm bringing this up because of what the market's now doing. Now the market's again doing what it did here. It's trying to punch through to the upside. Hasn't succeeded in it. Momentum is up. As momentum was pointing down here, we'll have to wait and see which way the market wants to break out. So you put that all together, you try to come up with game plans, and each morning at 5:40 in the morning, I start recording to give you a game plan. Now, let me explain that. By 5:40, I've already been up at 4 and I've read what's going on in Asia, Europe, what the reports of the day are. I'm in my office. I'm sitting there waiting to record for you. I've already written a good part of my morning full update, and now I start sharing what I'm seeing on the chart action with you. I've already gone through the charts once. I've made adjustments on window envelopes and everything from there. You can view this video. It takes me 15 to 20 minutes to record it and then about 15 minutes for it to render. And at that point, it's posted. So about 6:15, 6:20 each morning. And you can watch it on our website. You can watch it if you have an Android or a smartphone. And you'll be able to watch it, of course, on a tablet if you've got one of those. Did you see the new Apple iPhones? They'll be exciting because of how they're going to play and the clarity they're going to offer. It's going to just keep getting better and better. But the point that I'm trying to make here for you, and that this is all that I'm saying, is you get the information. And then from that info, I'm throwing out trade ideas. You may not agree with them. You might. You might like them. I explain why the trade ideas come about, where it's coming from on the chart. At the end of the day, I'm a chartist, not a fundamentalist. I'm looking at chart action. To me, all the fundamentals are in the market on the price as long as you're not getting a special report or a new report coming out. What do I mean by that? Well, you know you get CPI data today. That was a big report the market was looking for. Gold didn't stand still. It was just in the 1790s. It went up to 1810. You see that. You saw interest rates fell back to the 126 level. But we knew the report was coming out. Take that out of the thing. Then I know that the chart action is just based on daily action, not as concerned. I explain all that to you each day. $7.95 for the first 30 days. Come on, it's the price of coffee. All you need to do is go to our website, under the word research, sign up there. I'm Ira Epstein. You have a good day.